Good morning, this is Butch Shorak, Options University. This is Monday, October 29th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. And with that thought in mind, let's take a look at the economic announcements from the week that was. Big week that took place. FOMC meeting began on Tuesday morning, and then they continued and were summarized at 2:15 on Tuesday. On Wednesday afternoon, and we almost didn't even have a knee-jerk reaction from this meeting. A bit of a surprise, as many times we'll see big moves out of the FOMC meeting. Then we went into Thursday morning. We had jobless claims, no big move out of the market, and we see GDP came through on Friday. And the reading for the third quarter suggested the economy grew at about a 2% rate with expectations of about 1.9%, so certainly came out better than we expected on Friday morning GDP. Consumer sentiment next came out around 10 o'clock, and we saw that for October they rose to 82.6, which was expected around 83.1, so a bit of a disappointment on consumer sentiment as we had the week that was, and we'll see what kind of effect that had on the market as we look at Friday's day. But of all the things that were going on last week, the certain thing that was happening was we had earnings coming out. And as it turned out, earnings were not all that sterling as we looked at over 230 S&P companies that came out during this previous week. All right, so with that thought in mind, let's take a look at the week that's to come. Not much happening on Monday. Looking at Tuesday, we got the Case-Shiller and consumer confidence coming in on Tuesday. And then as we end the month and bring the month of October to an end, we see we got Chicago PMI coming out at 945 on Wednesday. And then we enter into November and find out exactly what happened in October. ADP employment report will come out. Jobless claims, which comes out every Thursday morning at 8:30, will come out. Tell us what the last week of October looked like. Productivity and costs sitting there at 8:30 also. Big morning Thursday morning. ISM manufacturing coming out at 10 o'clock. And then on Friday, we've got the employment numbers for the month of October. Find out what the rate of employment is as we head into that all-important November 6th election day to see if we get some funny numbers coming out for October to help bolster the election. And then we see oh no, that couldn't possibly happen. And then factory orders coming out at 10 o'clock on Friday with an interesting week coming in the market as far as economic announcements. We are entering into the month of November, and November is for us one of the stronger months of the year. In the last 21 years, basically we saw up months out of the Dow, S&P, and NASDAQ, anywhere from 1.5% to almost 2% for those respective indices. So November usually has great average gains for the overall market. We'll see what happens as the election takes place and how Wall Street is going to react to that. In general, we see these indexes up 14 out of the last 21 years. So could be an interesting month as we head into the month of November, which begins out what basically ends up being some of the strongest months of the year. And it kind of kicks it off because it begins the best 6 months of the Dow and the S&P and the best 8 months for the NASDAQ. Small caps come into favor during November, but really don't take off until the last 2 weeks of the year. So we're at that part of the time, and it's part of the reason why fourth quarter is one of the strongest quarters of the year. All right, with that thought in mind, let's take a look at the SPX, see what happened. As we see, looking at the last week, the last 5 days, came down on Monday and Tuesday, and then certainly went sideways with indecision out of the market as we looked at the last 3 days of the week. Notice that our 30-day moving average is starting to roll over, and we see we're spending time above the moving average, below the moving average. So with that, we're in a sideways trend, and we're going to see if we're going to hold or if we're going to end up in a downward trend as we come into this election. Probably will hold until after the election. So Overall trend sideways, currently in a down cycle, basically oversold on the short term in this down cycle, and we are due for a bounce. The question is, will we get it before the election, or will we just sit in this limbo as we head sideways? All right, taking a closer look, let's take a look at a little magnified chart of this, and we see that, look at this, Wednesday, Thursday, Friday, all kind of look like spinning tops, don't they? Just going sideways, going absolutely nowhere, basically about a 10-12 point trading range for the day, the last 3 days of last week, with the market making no commitment one way or the other, and it was definitely a week of not exactly sterling earnings coming out in our favorite companies, as we saw the week basically go nowhere in anticipation of the election. Taking a look at the Dow, we'll see what that looks like. Oh, look at that, very much the same. Again, last 3 days going absolutely nowhere, sitting above that 13,000 number, and was up 0.2% on Friday, even with Apple's earnings on Thursday night. All right, with that fact, let's look at the NASDAQ, see what happened. Whoa. Yeah, the Apple does affect the NASDAQ, doesn't it? Drop down below that 200-day moving average. Let's go back, look at the Dow. Where are we relative to our moving averages? Well, with the Dow, we haven't quite gotten down to that 200-day moving average. But when we look at that NASDAQ, we're actually dipped down below that 200-day moving average and bounced back up below that magic 3,000 number. Oversold, oversold, oversold. Are we going to kick it up? We shall see. Looking at the Russell, we see that we're still above that 200-day moving average. And again, we had 4 days that this thing went absolutely nowhere. We're certainly in a down cycle. Russell not showing us a great deal of strength. And remember, traditionally, that won't happen until we get further into the end of the year, when we see the Russell begin to move. And then it tends to run in January also. So with that thought, let's take a look at the week that was with all the indexes, get some percentages, get an idea where we are year to date. Looking at the Dow, we see that down for the week, down 1.8% and up 7.3% for the Dow. A bit of a tough week for the Dow, but year to date up 7.3%. NASDAQ down 17 points for the week, and we see down 0.6%, not quite as far percentage-wise as the Dow moved, and up almost 15% for the year. S&P 500 down 21 points, down 1.5%, just about as bad as the Dow, and year to date still up 12%. A real husky year as we saw the market move during the summer months, much more than we'd expect. Much of it can be blamed, one might think, on the election year. Certainly was enough news to knock the market down, and the election seems to be moving it forward. Russell down almost a 1 percentage point and no longer in double digits, up 9.8% for the year. So we see that for the year we've actually got some nice gains out of all of the indexes, but as we come in out of the month of October, not looking as healthy as it was earlier, as we went out of this sideways range, or actually out of that uptrend, and kind of dipped back down into a sideways overall trend. Of course, we're catching it right now at the bottom of the cycle, and we'll see what happens with the election coming up in just basically about 10 days. So what did the VIX do with all this movement down in the market and the sideways move? Well, we got exactly what we expected. The VIX did show a little fear, but notice it stayed below that 20 mark. That is our demarcation point of our usual average for the VIX, sitting somewhere between 15 and 20. We're sitting basically right snap dab in the middle. You know how this affects us option traders as far as the volatility that we get to work with. With that, let's take a look at some of the sectors that are sitting out there this week, and we'll take a look at the bond market. And looking at the bond market, we'll look at TLT, our ETF for the bonds, and we saw as the market pulled back a little bit towards the end of the week and on Friday. Look at that. Bonds popped up a little bit. Definitely in a downward cycle, though, as the market has been pulling back. Basically, the bonds have been pulling back, and that can happen in October and November. Next, let's take a look at the financials. What are the financials doing? Got some earnings out of the financials. There were some disappointments in some of them. Citibank lost its CEO. And what did the financials do this last week? Kind of just followed the market, sitting right there at the 50-day moving average. If the market does bounce up, look for the financials to follow right with it. Look for that higher high, higher low for a potential entry into the ETF on the financials. Looking at XLF, the Spider Select Group, for our ETF for the financials. Let's take a look and see how our basic week of down cycle affected oil. And we see, did it follow it? Oh, look at oil. Basically sitting down there. By the way, I noticed at the pump it was a little bit lower. Who would think $3.80 a gallon was something to get excited about? Oh well, how times change. USO, ETF for oil. All right, then let's take a look at gold. That's safe haven. And we see that gold kind of pulled back as the markets pulled back, and not near its previous highs up there. Looking at GLD, our ETF for gold, sitting between the 50-day moving average and the 200-day moving average. So statistically, one might think we had an uptrend, and we did have one for quite some time, but we see we've now pulled back above the moving average at 175, below at 165, moving average at 170. We definitely have a trading range right here on gold as it's gone sideways with the overall market. Let's take a look and see what kind of volume we had Friday on the S&P to determine how meaningful this sideways range is. And one would expect that we'd have kind of average volume, and that's kind of what we had. No big volume spike there, as we see the S&P going sideways for much of the week, in spite of the fact that earnings have been coming in weaker than one would like to see. So with that thought, that's the week that took place. Market forecast looking forward to next week. We got a lot coming. We're entering in October. We're entering into November, rather. October is drawing to an end. It'd be interesting to see if we get some window dressing as we end this month. And we got plenty of economic announcements coming out, and also the continuation of earnings. Plenty of news to move the market, but of course the biggest news out there is presidential election. Who will be the president? So for those of you that are gold members, stick around. We'll look at our stocks to watch. And for those of you that would like more free videos to watch, you can go to www.optionsuniversity.com/free gold. Ladies and gentlemen, thank you for being here this morning for Market Forecast. This is Butch Shorak, Options University, Monday, October 29th, 2012, the strongest quarter of the year. We are currently 1/3 of the way through it, and we'll see where we go. Again, thank you for being here.